Okay, so Amrita Sen has followed every twist and turn of the unrest in the Middle East and North Africa. She's Assistant Vice President of Commodities Research at Barclays Capital, and she joins me now. Amrita, thanks very much indeed for speaking to us. So I want to start by asking you how this UN resolution, how foreign intervention in Libya could possibly impact the oil markets, the price of oil.
Yeah, I think obviously, as you've seen, prices are already reacting to it. In a way, it just means that Libya is going to be out of the oil market for a much longer period of time. That's the real conclusion of it. It's far from nearing any resolution. There is clearly, as you said, civil war, the differences between the East and the West. And earlier, as we had seen, Gaddafi was moving into the East and gaining control over the country. And there was probably some hope. Not I wouldn't use the word hope, but at least some ideas that maybe if he did regain control of the country, maybe some of the oil facilities would restart. But at this point in time, no, I think Libya is out of the market for a prolonged period of time.
What about those that say the reaction in the market a little too exaggerated, because at the end of the day, Libyan production accounts for somewhat 2% of world oil supply? So in other words, even if you take Libyan oil totally out of the equation, not going to have a huge impact.
I wouldn't agree with that at all, because Libya, fine, 2% of the global total, in a world where incremental supply is increasingly problematic. We are already down to about 3.3 million barrels per day of spare capacity, primarily in Saudi Arabia, a bit in UAE and Kuwait. And you get another supply shock like this, say Nigeria with the upcoming elections, you're almost down to nothing in terms of spare capacity. And demand hasn't shown any signs of slowing down. In a market where the biggest oil producers are countries like Iran, Iraq, Nigeria, Libya. Anything can go wrong in a lot of these places, and you definitely need that buffer. 2% in a market that's already so tight is incredibly important.
So then let me ask you about how much fear there is in the market about the prospect of all this spreading to Saudi Arabia. We've already seen some signs of trouble, disaffection in the east of the country, where you've got, I think, the world's largest oil refinery. If Saudi Arabia goes, you can kiss your spare capacity goodbye.
Oh, yeah. I mean, I think that is the ultimate worst-case scenario. In that case, prices will react very, very sharply. But I think our base case still remains that Saudi will be okay. It's not saying we won't see unrest, but King Abdullah is a lot more popular. And generally, they will be able to control the bulk of these protests. I think it's important, though, not to rule out any possible attacks. It doesn't stem from unrest in Saudi, but of course, given the situation in a lot of these countries, Yemen is the real threat for Saudi Arabia and Al-Qaeda there. They have targeted the Saudi oil infrastructure in the past, and yes, they may do it again. But otherwise, Saudi oil should be okay. That is still the base case scenario. I think what's more important is what's going on in Bahrain, because that has actually really led to a deterioration of Saudi-US relationships, which is very key in keeping oil markets calm. That's very important.
So you are sensing what I suppose deterioration is a bit of a strong word, but Saudi intervention in Bahrain having some impact, US-Saudi relations?
Absolutely. I think the US-Saudi relationship is very, very bad at this point in time, and we wouldn't rule out it deteriorating even further. Clearly, they are not on the same page about this, and again, in the oil market, this relationship has defined the market for decades. If we see a situation like in the 1970s, what we saw US-Saudi relationship souring and the impact that had on the oil market, if we go to a situation like that now, oil prices will just rise even further.
How high?
Oh, you could easily add $10, $20 very, very quickly. It's not necessarily going to stay that high if, things calm down, but the knee-jerk reaction, if that were to happen, would be very, very high.
Regardless of what happens between the US and Saudi, what are we looking at? What's the outlook for the price of oil? How concerned should we be?
Yeah, I think, see, without Libya in the market, clearly there is support at 110, 112 for Brent. It hasn't really pulled back below that, and whenever it has bounced back. So that is really the effect of taking out 2% of oil production. And then I think the real threat is Nigeria, with the elections coming up. Then, yes, you can probably see prices breach 120, even go towards 130, depending on how much oil output is lost. If there's nothing happening, then yeah, around 112, 115 prices should stabilize.
Amrita Sen from Barcap, great to get your thoughts on how these geopolitical dynamics impacting the price of oil.